G'day and welcome to AusBiz for the Global View on this Monday. I'm Andrew Gagan. Thanks for joining us. Well, let's catch up with what's happened over the weekend. President Trump calling a halt to almost 2 weeks of airstrikes on Iran, while Iran has also agreed to pause hostilities as Oman seeks to broker a peace deal. That has seen oil prices retreat and lift investor sentiment ahead of a week dominated in the US by mega-cap tech earnings and a policy decision by the Federal Reserve. So on Friday, Wall Street stocks were mixed. The Dow up, the S&P little change, and the Nasdaq down more than 0.5%. Shares of chipmaker Intel fell about 8% despite strong results as investors grow increasingly uneasy about multi-billion-dollar spending on AI that's yet to yield returns. This week, Amazon, Meta and Microsoft report earnings, with those companies along with Alphabet having forecast almost $750 billion in spending on infrastructure this year alone, while analysts expect that figure to hit $900 billion next year. In other results, on Friday, Verizon raised its annual adjusted profit forecast and said it had secured a more than $1 billion deal with Google to provide connectivity for its data centers. And American Express raised its revenue forecast as its affluent customers continue to spend on leisure and entertainment, but its shares slipped as investors focused on an unchanged profit outlook. Well, the Trump administration says it has paused US attacks on Iran to allow more time for diplomacy. Iran, which had been following each night of US attacks over the past 2 weeks with its own strikes on neighbouring countries that host US bases, has also held fire for the past 2 days. And Iran has separately been holding talks with Oman over the Strait of Hormuz. And the development comes after President Trump's advisors reportedly told him they were running out of targets amid a depletion of the US arsenal. Well, US Treasury yields dipped from 18-month highs on Friday as oil prices eased, although investors remain cautious ahead of the Federal Reserve's policy meeting this week. The US 2-year at 4.34%, the 10-year at 4.68%, markets pricing in a 40% chance the Fed funds rate will be hiked by 25 basis points at Wednesday's Fed meeting, a 100% chance of a hike by September. Australian 3-year government bond yield futures fell to 4.69%, the 10-year at 5.09%, markets pricing in a 40% chance the RBA cash rate will be hiked by 25 basis points at the next meeting on August 11th and a 100% chance by November. The US dollar index was little changed, the Aussie currently trading at 70 US cents. Well, crude oil futures fell on Friday on reports that China had initiated a push to resume stalled peace talks between the US and Iran. Brent futures settled at $97 a barrel. They've since fallen since then. Gold has edged high as oil retreated. Spot gold at $4,050 an ounce. Copper futures rose slightly. Iron ore little change at $99 a tonne. And Bitcoin trading above 65,000 US dollars. Let's get across what we're seeing on global markets then. Joining us, Greg Smith from Generate Investment. Greg, welcome to Monday. Great to catch up with you again. So it is a big week ahead. Certainly US earnings, Fed decision. Let's though start in the Middle East, given those developments. Looks as though both sides are holding off for now, and as a result we have seen the oil price come off.
Yeah, that's right. So obviously oil's been moving around like a bit of a yo-yo, of course, and we did see Brent oil back above 100, which is a psychological level to then sort of edge back lower if you look at the futures. So yeah, I mean, obviously there's different sort of suggestions about why Trump is sort of downing missiles, as it were, but I suppose the arsenal's sort of being used pretty vigorously. But yeah, obviously everyone wants to sort of see some sort of peace accord, so we'll have to see where that goes. Of course, in the interim, it's back to sort of war of a different kind with the expiry of those tariffs on Friday, and I suppose the new regime that he's put forward of sort of 10 to 12.5%. So shows you those sort of trade frictions haven't gone away, and he's obviously threatening bigger things against Europe and the like.
What's the impact of that new tariff regime on New Zealand?
So yeah, we've been hit, we've been hit with 12.5%. So we've gone from 10 to 12.5. But we're, I suppose, fortunate enough in that around about a third of our exports are exempt. So you think beef, which the Americans need, given the given their herd numbers, and kiwi fruit as well. So, but yeah, we've got around about 2/3 of our exports exposed. So if you look at the market open today, that's sort of rattled the cages a little bit. So Fisher Paykel Healthcare, which is our biggest exporter, our biggest company, over 15% of the market, that's down around about 0.2%. Yeah, we're an export nation, and I suppose it doesn't do a lot for certainty there. I suppose it's not really so much the direct impacts. So, as mentioned, it's more about the impacts to sort of global growth and obviously what we saw sort of last year as well, which yeah generally looks to be holding it together pretty well. But I suppose given what's been going on in Iran, we've sort of forgot about the trade side of things for the moment. But we've had that reminder, haven't we?
We have indeed. So you mentioned Fisher Paykel, Fletcher Building also out with an update. Did you get across that?
Yes, so Fletcher's, there's a couple of updates this morning. There's also Sparks out with one as well. They're looking to sort of separate their businesses. Fletcher's sort of doing likewise. I mean, it's slimmed down quite a bit over the past, this year, really sort of reorganising, trying to increase its exposure to the cyclical nature of the construction industry, which has sort of been down the dumps a little bit. Looking at it, the shares performed quite well, but we'll have to sort of see where that goes from here.
Now, if we take a look at what's going on Wall Street, Greg, it is a big week ahead. Key results, particularly, what have we got? Amazon, Microsoft, Meta. This, of course, coming with that ongoing uncertainty, certainly as far as investors are concerned, of just that vast amount of capex they've been spent and where they're going to see those returns.
Yeah, it seems to be all about the price tag, doesn't it? I suppose that was sort of the emerging theme from last week with Alphabet, but also Tesla to a certain extent, and also Intel. So yeah, looks like it's probably going to carry into this week, Andrew. Perhaps less about the headline earnings numbers, because all three of those results I mentioned were actually really good, sort of in terms of the headline revenues, headline margins and earnings even. So yeah, more about AI spending, more about AI monetization. So I suppose, looking at a few of them in turn, Microsoft obviously has been a lot of talk about SaaSmageddon, how their own AI strategy is going, how much they're spending to sort of protect that moat. Azure growth, that's probably going to be the most important thing that sort of that investors look at, along with the cost of that growth. Then we've got Meta, that's probably more a pure AI monetization story. What's advertising revenue growth doing? Is AI driving it? How much are they spending? What's the engagement like? What's their scale of spending on AI infrastructure? Amazon as well, AWS growth. Again, what are their margins doing? What are the costs doing? And then we've got Apple, probably a little bit of an odd one out. iPhone demand, obviously, that's always very much in focus. And they've sort of been a little bit more coy about their AI strategy, haven't they? So some update there, I suppose, is going to be really much in focus. And again, spending. So I suppose, what we saw last week might well carry through to this week, that just because you deliver a really good quarter on the face of it, digging deeper down, what is the cost of that growth being? And I think that looks like it's an early theme at this stage.
And Greg, as I mentioned there, the Fed, in fact, we've got a raft of central banks making decisions. Obviously, the Fed, the Bank of England, the Bank of Japan. So I guess saw some nervousness there just around what the Fed is likely to do, because when we last heard from Kevin Walsh, he was fairly hawkish, wasn't he?
Yeah, that's right. So I think it's still the wait and see, and it's a bit hard. We obviously the central banks are looking. They're unsure, like the rest of investors are, about what's happening with the conflict. Is it going to drag on? And not so much the oil price. Obviously, that's pretty important, but also the second order effects. You get a lot of central banks saying they're prepared to wait and see, or give it the benefit of the doubt, and underlying inflation, if you strip out energy and food and the likes, doing okay. But then we are seeing some pressures as well, particularly as economies have been resilient. So I think this week we'd be very surprised if we get a move that would sort of be in keeping with what we saw from the ECB last week. But yeah, there is that pressure, and as you mentioned sort of at the start, markets are pricing in 1 to 2 rate moves by the Fed this year. So we'll just have to see on that. And then obviously we'll be getting into the political sphere as well, won't we, later in the year with the midterms. Certainly seems like some political drivers there in terms of what the announcements from the US on this renewed attempt at a peace accord. But I think the central banks, like investors, are coping with a lot of uncertainty about what does the next sort of few months hold. the safest option, I would have thought, or most conservative option would be to sort of keep things as they are. But yeah, the hawkish comments starting to come through doesn't surprise too much as well.
Well, in fact, here we're going to get a read on quarterly inflation. Also, you get the PCE read out of the States this week. That's obviously going to influence those central bank decisions. I notice also there in New Zealand, what you've got consumer and business confidence numbers. I mean, what's the expectation? How have they been performing?
Yeah, so our manufacturing sector is actually doing okay. Our services sector is not so, and it's been sort of in contraction. Our central bank, well, the last decision was a fairly split one actually, so that's probably a factor as well. We've got actually a little bit like Australia. We've got a lot of regional disparity actually down south. Further down south you go, the mood is a bit more upbeat, whereas up in the North Island it's less so. So investment intentions are very subdued. Employment intentions are very subdued. We're a big importer, or a net importer of oil, so that feeds through our economy. So that's certainly a factor. We want to see an end to sort of these higher oil and petrol prices. So I'd say things are fairly guarded, fairly subdued. Our export sector has been doing well thanks to weak currency. Our agricultural sector has been doing well, and our tourism sector it has been doing well as with the weak currency. Not so good at taking a trip aboard, which I can sort of vouch for, having gone to Europe recently. But yeah, the general sort of sentiment is pretty subdued, and I think sort of what will swing it will be perhaps an end to the conflict or some sort of peace accord, and then that petrol and oil price coming back down. We'll certainly be looking at your CPI over there as well. So I guess given your jobs numbers last week, that's going to hold a lot of relevance for the RBA decision, and of course also the US PCE inflation. And I think also sort of be looking at the outside of tech. I think it's been interesting to look at some of these older economy results coming out. So I think we had a pretty good one from Amex on Friday. Again, was costs were a factor. So we've got the credit card companies again this week. We've got Boeing, which is always of interest. We've got some consumer names as well, and L'Oreal and Adidas.
Lots to get our heads around this week. Greg, enjoy it. Thanks for joining us in Generator Investment.
Thanks so much, Andrew.
All right, let's turn our attention to where we're going to begin. It looks like a positive start. SPI futures indicating we're going to be up around 0.6%. Lots of production updates too and other news. We'll get across all of that in just a moment. Stay with us for the open.